Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
On the show today, we have a very popular guest back with us, but before we start, thank you to everyone who participated in our free book giveaway at palisaderadio.com over the last 2 weeks. Also, we want to welcome First Majestic Silver Corp on as our new lead sponsor for Palisade Radio. It's a pleasure working with such a renowned team led by CEO Keith Neumeyer. Now, let's welcome David Morgan on the show, publisher of silverinvestor.com. David has a wealth of knowledge on the precious metals sector. He's dedicated much of his life to the space. And while this interview is merely a foretaste, David's new book, The Silver Manifesto, gives you his full thesis. David, welcome back on the show.
Colin, thank you very much. And actually, the website is silver-investor.com, but the report's called the Morgan Report. And as you know, Colin, it's money, metals, and mining. We look at the entire resource sector, not just silver and gold. Although that's our main focus, we've looked at almost any type of resource company you can name. In fact, we actually put an oil selection in recently, which is the first time we've done that outside of one of the streaming companies that does gold and oil. So anyway, just to be clear, the publication's called the Morgan Report. Thank you.
Thanks for that, David. I think it's fair to say that things are warming up and the shit's inching ever closer to hitting the fan. Bloodbath is not quite here yet, but all the signs are pointing to a very ugly next 6 months. A video you just uploaded to your site discussed how the 5 largest economies are all in or entering bear markets. A quick recap of your figures so you don't have to go over them. The Dow is off 2,000 points from its high. China at a 78-month low, off by 40%. Japan off 3,000 from its peak. Germany's off. The UK's off 16%. France by 18. Brazil's off 12,000 points. Italy's down 50%. India stocks are down 4,000 points. And Russia off by about 10%. David, are you seeing things finally hitting the fan here?
Well, you know, at my age, I mean, I've seen markets go up and down, and they all do. Gold goes up and down, stock markets, et cetera. But, you know, my main premise, as you well know from my early work and present day, is that, you know, no fiat money system has ever outlasted the test of time. Every fiat currency in the history of mankind has failed. And so we are failing, and we have failed, but in a manner that most people have been able to adjust to it. From 1913 till now, the 100-cent dollar, which is worth 100 at the founding of the Fed, December 24th, 1913 to present day, is worth about 3 or 4 cents. So you've lost 96 cents purchasing power, 96% is a better way to say it. And because of that, now we're arguing about, you know, how robust this remaining 4% is going to be. And, you know, if you lose half of that, you're down to 2 cents. So I am seeing, yes, that the truth is coming out regardless of what the mainstream media, the mainstream financial press has to say about the recovery, or we have it under control, or we're going to do this measure or that measure. It's all hot air. It basically yields nothing more than the ability to use the psychology of pretending that they know what they're doing, and the overused metaphor of kicking the can down the road. That can's about ready to go over the cliff as far as I'm concerned. I don't think there's much time left. However, in the past, I've thought that very same thing. And one of my mentors, the late, great Harry Brown, said, you know, they can muddle along, was his word, for a lot longer than you might anticipate. So I always keep that kind of in the back of my mind. Nonetheless, with all these stock markets failing, the currency problems, the currency wars, the geopolitical scene, you know, Putin showing a lot of strength, the current administration looking weak, talking out of both sides of their mouth, the unpopularity of this current administration, the unpopularity of the U.S. Congress, the world looking to America and saying, what happened? You used to be, you know, standing up for the right things and doing the right things going back 50 years or so. So there's so many things, Colin, as you well know at your tender age, that is absolutely 100% against the principles that made this world a better place. And most of those have been thrown in the trash can of history, and we're moving down in a direction that most people on the planet do not like or agree with.
Janet Yellen and her disciples at the Fed have been going back and forth for the past several months on whether or not to raise interest rates. A lot of people are saying it's not really a decision that she can make. If she raises interest rates, things are going to collapse. Do you think there's a method to the madness, or is she hopeful that she's going to be able to raise but really has no clue what she's doing?
Well, my perception is she has very little clue what she's doing. I mean, when I watch her, and I don't want to be too critical. I mean, I'm not the chairman of the Fed, but she looks bewildered on a lot of the questions that are thrown at her. And most of those are softball questions that they anticipate ahead of time or they get ahead of time. Nonetheless, they're in a box. I mean, they want to show strength by raising interest rates, yet if they do, at some point, it definitely would collapse the economy. I don't agree that a quarter basis point would do that much as far as collapsing the economy. I don't think it's that fragile at this level, although it could be. The point is that if they ever were able to raise rates to what would be considered normal from an investor standpoint, where the real rate of return was in the, let's say, 3-4% range, maybe even 5, that would definitely tank the economy. So I'd like to go on a bit more, Colin. Right now, if you look at what the purported inflation rate is, let's just call it 2%. I haven't looked at the latest figures in a while. So to get a real rate of return, you'd have to have interest rates above 2. And those are questionable because the way that the Federal Reserve accounts for inflation is really ludicrous. I mean, what food and energy are taken out of the equation. So if you look at shadowstats.com by John Williams, you might have a true inflation rate of like 7%. But let's just leave it at the 2% that the Fed says is the CPI. So to get like a return, they'd have to put interest rates at 4%. And that is probably impossible. So will, 25 basis points, or let's say instead of a quarter point, they do an eighth of a point, 0.125 basis points. I think if that were to take place, then I don't know what the mainstream press would say. I think it'd give the Fed a little bit of credibility that they're really tough and that they see the economy improving. Since these improvements are so wonderful, they're able to, inch up the interest rate. But no, I mean, the truth of the matter is they can't set interest rates at what we consider to be normal yields for savers, where you have a quote-unquote risk-free rate of return of somewhere, on a 5%, maybe a little higher interest rate, where your life savings would yield you something that you can live off of. Right now, at the current yield rates, if you want to have just a basic, low-level, middle-class income, you have to have something in like the $40 million range because the interest rates are so low. There aren't many middle-class Americans that have those kind of cash positions to be able to get an interest with the interest currently to eke out like 30 or 35,000 a year basis their cash position. So, if you look at it from that aspect, if you turn things around and open your mind and do a little bit of outside the box thinking, what would that mean? If you had to have $40 million at current interest rates to yield yourself, $35,000 a year income. Well, what that would say is you had a hyperinflation is what it would say. But of course, we're in this quote unquote deflationary environment. So a lot to think about, Colin. There's, to be succinct and sum it up, no, they can't raise any real interest rates meaningfully at this point in time. It would crash the economy. Can they go up a few basis points here and there? Sure, I think they can, and I don't think they do much damage. But once they start to move up, a point or 2 points, or even 2 points, I think would crash the economy.
Yeah, and you said that Janet Yellen looked bewildered, but how about her passing out on stage at her speech the other day? And I guess it's bold to even get on stage with that much resting on your shoulders. I want to inch over to the precious metals a little bit. Will the interest rate hike, if it happens, move gold north or south? If it doesn't happen, do you think it's going to start to move gold or silver, or status quo remain in place?
I think it'd be pretty much status quo. I mean, you'd probably see them move down. I mean, just because there's so much that goes on in the paper paradigm that, and the mainstream financial press, they probably, make a big thing out of a little thing for a while. But I think it basically have no real effect. And again, I'm going to repeat myself slightly. I'll try to be, quick. But You're not going to have to worry about interest rates affecting the gold price until the real rate of return is substantially higher than what the inflation rate is. So if you look at John Williams, say inflation rate 7%, and for real interest rates to get above the inflation rate, you look at, say, 10%, that would be a 3% real rate of return. You're never going to see those interest rates. In other words, what Volcker did in 1980 to move the short-term and the long-term rates up to 17.5 to 20-something percent and really destroy the bond market, that the ability to do that is never going to happen again in my lifetime. It's impossible. Again, just a few points probably would crash the economy. But I want to be clear on that because people get this idea that any change in interest rates is going to crash the gold price. No, it has to be a real rate of return, because really what bondholders want is something substantial that they can count on that's risk-free. And there's nothing more risky in the world right now than any government bond. That's my view, and I'm sticking to it. At my age, there was a gentleman named Franz Pick, and I forget how to spell his last name, but he called bonds guaranteed certificates of confiscation. In other words, when you put your money long term with, say, 10, 20, 30 years with a government entity, you were guaranteed yourself that they would confiscate the value of your money over time. And people of my age that study these markets at the level that I do knew that. And I haven't owned a bond in my entire life, nor do I wish to. But this is the reality of the situation. And yet, of course, this is considered to be one of the most safe haven, risk-free investments that exist. And yet the exact opposite is the truth.
David, since we last spoke a couple months ago, the main thing that's changed, of course, is these markets, including the Dow, have started to come off of their highs. We don't know if it's going to last yet. I've been saying for a couple of years, and a lot of guests that come on the show have been saying, that a bull market in gold and silver would be unlikely until some of the capital that's been rushing into these equities seeks other avenues. And as these markets begin to decline now, do you believe that money will start moving into the precious metals? I know that we just talked about the Fed's interest rates having a lot to do with that, but just the fact of money coming out of the stock market, do you think that's going to give a boost yet?
Absolutely, I do. Mike Maloney does a great job in one of his lectures. I think it's actually in the History of Money. I forget what the series is called, Secrets of Money or something like that. Hidden Secrets of Money, I think. Anyway, back to the point. Yes, if you were actually good at making investments between gold and the stock market, you do very well, because you could put money into gold when it's appropriate, like say early 2000 to say 2011 when it peaked, and then take that money and put it in the stock market and go from 2011 the peak of the gold market into the stocks and watch them go up, make a new high, and then switch back from the stocks back into gold, and you just have basically a steady state, ongoing, investment strategy that would take you higher and higher and higher. So it does oscillate between the two, and I think we're just seeing the situation where we're looking at stocks coming off. But I want to go a bit further, Colin, because the commodity sector at large is not looking that robust at this point in time. But I've always stressed that gold and silver are the top tier of the commodities markets, and are not really commodities, although they're on the exchanges and they're considered commodities and they're talked about as commodities. And if you look at commodities, you're going to find gold and silver. I get all that. The reality is that they're money. They've been money for thousands of years, and they will remain money. And because of that, the top tier of the commodities markets, they're treated differently, which means that you could see a slowdown not only in the equity markets on a global basis, but a continuing, let's say, lethargic commodities market overall, because the overall global economy is contracting, and yet gold and silver continue to go up. I know they're low now, but what I'm saying is, let's say the low is in or nearly in, and they start to inch higher and higher, and they grind higher, and all of a sudden, silver's back over 20, and gold's back over 1,500, and people are starting to notice the metals again, and more money's coming out of the equities and into the metals. Yet, at that same time, the commodity sector at large is not moving much higher. And I really think that could be the situation that we're facing going forward. There's a lot to the theory of momentum, not only in physics, but in financial affairs as well. And the momentum really isn't there. I mean, the financial markets are nowhere representative of the true economy whatsoever. There's such a disconnect, it's ridiculous. But, the mainstream financial press will point and drop their jaw and point and jump up and down and tell you how great things are. Just look at this chart, just look at this number, look at the Dow Jones, look at the S&P, look at the Russell 2000, look at the emerging markets, look at this, look at that, look, we're not in a realistic financial press. We're not in a realistic mainstream press. It's really only the alternative media where you're going to get information that you can really utilize that's going to be beneficial to you in the long term. People have always sought the truth, and they are always looking for it. And they're all alternatives to the mainstream. And many, many people age 40 or younger basically don't look at the mainstream anymore. They really look for the alternative media to get most of their information.
Looking back at history, a lot of the shifts in the market coincide with a catalyst. Like in 2008, you had Lehman Brothers as part of the trigger. And today you look at so many things that could be the trigger. There's a bunch of energy junk bonds tied with the oil. Glencore has suffered through 5 years of detrimental markets and commodities and has more debt and derivatives than equity. Do you think that to really trip things off here, we're going to have a catastrophic event unfold?
Probably, yes. I think so. And you outlined one that I'm very concerned about, and I'm writing in this month's Morgan report. It won't be a real in-depth thing. I mean, I want to get a look at the derivatives, and I don't think I'll be able to really dig down deep into that. But certainly, this is a company that trades in 80 different commodities. They're traders as well as investors, as well as having huge positions in a lot of companies. And look at some of the people that own them, like BlackRock as an example. So certainly this is very detrimental. And this is why people want the precious metals. They want the precious metals because they have no counterparty risk. And that is the only asset class that can give you that. So because of that fact, as people wake up further, or people that actually were aware of that have left the sector, will come back. And I think we're already seeing a tightening in the market that only us metals heads are really talking about. But on the retail side of the silver market, it's very tight right now, and there are delays. And then on the gold side, it's pretty clear that the gold situation is probably not as tight as the silver situation because it's a bigger market. But nonetheless, these paper markets that certainly add supply, as we talked about on the last show, have curtailed the actual free market price that you'd find if we were dealing in a physical-only market.
Do you make anything of a guy like Carl Icahn entering the equity space? I know it's in copper, it's not in precious metals, but it had such an impact, at least at first, that Freeport-McMoRan became one of the most heavily I don't want to say traded, but most looked up stocks on the New York Stock Exchange a few weeks back. Do you make any significance to these big smart money guys coming in at the bottom here?
Oh, absolutely. I mean, if you go back to my early work, I talked about silver being at an inflation-adjusted all-time low. This is for all of recorded history. I mean, if you look back and look at silver at the Great Depression at 22 cents, which is a pretty low number, but if you inflation adjusted that number, you would find that the $4.50 price in silver in the late 90s, early 2000s was lower on an inflation adjusted basis than 22 cents during the Great Depression. And nobody is buying the bottom. I was, or a couple of European friends of mine, but very few. But there were some others that did buy the bottom. Who were they? Well, they were Warren Buffett, bought 129.7 million ounces. Most of that came off of the COMEX. You'll never see that again. The rules now are you can only take 1,500 contracts of physical off the exchange. Then you had Warren Buffett, you had George Soros with Apex Mining, and then you had Bill Fleckenstein recommended Bill Gates get into Pan American Silver at the right time. So it wasn't millionaires that were buying the bottom of the silver market. It was billionaires that were buying. But unless you were really, a careful student of the silver market, most people just didn't even have a clue that these kind of large purchases were going on by these billionaires. So certainly it does pay, it pays a great deal to an investor to watch those kind of people and what they're doing and what they're buying. And certainly you could say follow the leader makes sense a lot of the time.
David, I promised on our last interview that we would get you back on the show to not only discuss gold and silver, but also precious metals stocks. I want to ask you, in terms of the precious metal stocks, what you're looking at, of course, by several metrics, they've never been cheaper in history. I mean, you chart the HUI against the gold price, and since the HUI has been recorded, they haven't been this low. The only positive that I've seen anywhere right now is that because the equities are coming down, you're starting to see gold and gold equities against other markets tick up. That's really the only positive we've seen in a long time. What do you see going on, and what are you looking for in precious metal stocks?
It has been extremely difficult for yours truly and others in this sector. And certainly I've always taught everybody to have, precious metals before they ever looked at precious metal stocks. To sound a bit defensive, if you look at the way we structure portfolio, which is different from almost everybody else in my business, there are a few that are similar to me. We look at top tier, mid tier, and speculative categories. If you go to our top tier category, and take, let's say, a stalwart like Franco-Nevada as an example, I think we recommended that stock at around 17, and it's substantially higher than that. I think it's in the 40s today. So had you bought when we recommended it, you've made some money still. That's true. I think every stock we have in the top tier is above where we recommended it, with the exception of one, and that's where we say big money goes into big companies. Going back to the Carl Icahn situation you mentioned a moment ago. But the mid tiers and the speculative stocks have been just decimated. Further comment is, one, buy when there's blood in the streets, certainly if you have any cash that's available. Secondly, if you're not in the sector, it's a huge opportunity. If you are in the sector, and of course people that follow my work are, such as ourselves as well, we're suffering along with them. It's a time to really, one, evaluate your portfolio. You definitely want to get rid of any dogs you have and make sure that what you have in each category is absolutely one of the best possibilities for future gains going forward. I think it's probably one of the biggest opportunities out there, but I don't want to be overhypey, because certainly I've thought we were bottoming a while back using a metric that you use with the HUI versus the gold price. I mean, I never thought it'd get this low, but I also saw several years ago where there were so many competing investments, because a lot of institutional investors used to buy mining shares. However, now with all these ETFs, these fund managers, money manager types, do not have to buy the underlying mining equities. They can go straight to an ETF, or they can use the proxy of, let's say, the GLD or the SLV to purchase a gold or silver position without ever having to have the risk or the analytical capability required to choose good mining companies. Having said all that, nothing moves like a small mining company can, or even a mid-tier. In fact, if we have the kind of economic conditions going forward that I think we will, even the stalwarts will move substantially higher, because there is a very small precious metals market compared to the amount of money that's floating around the global economic system. So it wouldn't take much of that money to move into what they trust, which is gold and silver. And if we get to a position, I'm not saying this would happen, but could happen, where the physical gold market and the physical silver market not necessarily seize up, but come into a situation where it's very difficult to source in size, in time. Similar to what we have right now in the silver market, where certainly we're looking at only the retail side, but where you've got to wait 4 weeks, 6 weeks, 8 weeks, sometimes 10 or 12 weeks to get product. People are going to jump into the next best thing, which is mining equities. And because there are so many investors out there now on the electronic platform of their computer that can click a mouse and buy the XYZ mining company, once the public catches on and the psychology changes to, oh, I see now, I need to own precious metals, and if I don't, I'm going to lose because this currency I own is going down and it may never recover. That'll be the psychology. In other words, there'll be fear and panic going on in the market. moving into the precious metals. And once that takes place, the psychology will spread quickly and you'll see all kinds of volume come into the market. Now, when is that going to happen? Well, it's probably not going to happen in 2015. I think it'll edge into 2016. You'll get some strength, but I don't think you're going to see this panic, manic buying that I've talked about for so many years until it's probably to 2017 or so. And by then, it's really a little bit too late. I mean, that's the point in the time when you want to be selling into that sector because it's getting so frothy. I mean, look at what happened in the tech wreck. Look what happened in the housing bubble. Look at these charts. When you go parabolic on anything, commodity, stock, even the metals, you've got to take a hard look and determine, what your profit level should be, because when the panic buying starts, it only lasts a short duration of time. And once that entry is made and there's no one left to sell to, they can come down awfully hard. So, that's my job later on. I'm sure when I start calling, we're getting near a top, I'll be not loved by some people because the mentality gets to where we got in the previous market when silver went from roughly the $19 level to the $48 level. And that caught pretty much that entire move for our subscribers. But yet, I had a lot of my colleagues telling me when I called the top at 48, I was going to be shunned forever because silver was going to 100. I'd look bad, I'd lose my reputation, my integrity was shot, and no one would ever talk to me. But lo and behold, I do my own work and I make my own calls, and I called it. So I got that top. Luckily, if I had to do it over again, I certainly would have hedged more than I did. And I don't know if I'd gone short or not. Philosophically, it's hard for me to short the metals, but nonetheless, had you done that, you certainly would have done quite well had you had the foresight that I didn't have, that this bear market would go for 4 years. I really thought 2, maybe 3 at the most, but here we are more than 4 years into the silver bear market.
Yeah, and not only 4 years in, but this is also the worst bear market by decline, especially in these stocks. So you have the confluence of decline in time, and then especially after coming off the crash in 2008, very few investors foresaw this coming. And the reason I bring that up is that we have a recipe for a truly epic bull market coming, because when it starts, there's so few people involved, like you just touched on. Is there a chance, do you think this is going to be one of the most epic bull markets in these precious metal stocks in your lifetime?
Well, you're leading me somewhat, but I've said it before and I'm being consistent. I really think that when the truth comes out that these fiat currencies aren't worth the paper they're printed on, and the psychology shifts to that idea. It only takes really 1% of the population that isn't involved in these markets now to shift into these markets. And once that takes place, I think it's going to be a record breaker. In other words, I think it's going to go into the financial history books as one of the most epic events that's ever taken place, because the death of the dollar has never really taken place. Yes, you could argue there's been currency collapses within the U.S., and I probably know as much as many people in that sector, but not at the level we are now, where it's the reserve currency of the world, not since Bretton Woods. And this is what we're facing. So when this dollar paradigm unravels, and let's say it happens quickly or even slowly, but slowly accelerates, let's say, you're going to see a panic, again, I'm using the word, where this market, the precious metals or anything associated with them, meaning mining shares, ETFs, futures, options, and the metals themselves, is going to be sought after by everybody and his brother-in-law. I mean, everybody's going to want in, and it's a small market. So I do think it'll make financial history. I really believe that. Now, am I right or am I wrong? Believing something doesn't mean it's going to happen. But I really do think, with all I know and others, certainly it's not just me. I mean, there's so many commentators in the precious metals, honest money, economic system, alternative media, whatever you want to name it, that tell the truth that when the trust breaks down further, there is only one thing you can trust, and that's something you can hold in your hand and say, this has been money for thousands of years. I trust this. I don't trust whatever, what the mainstream is telling me, or what the bankers are telling me, or whatever. And they're really trying to close it off. I mean, there's talk about not being able to use cash. There's talks about There's limits on this and that. I mean, I just sent out a film to our free email list about the debt crisis of 2001 in Argentina that gave a pretty good documentary about what actually took place. So people can get a feel for reality rather than me coming up with some scenario that may or may not happen. I can at least show them a video that's about an hour long of a documentary, and they can see for themselves in the streets and people speaking to the camera what actually took place. So, Colin, we're facing very, very interesting times. The end of the world isn't the end of the world. And what I mean by that, in a true, total, complete, absolute economic collapse, all the wealth stays in place. Nothing burns to the ground and smolders away. You just have a very big shift in how monetary affairs are settled. You have big dislocations in what values are, and basically the market pretty much can take over as far as what the prices are and what values are and how things are settled. And of course, the bankers will try to head that off with a different currency or a different system, or perhaps Jim Rickards right about the SDR, I don't know. But nonetheless, I think this is not going to go much more than 2 years further. There's others that disagree. I'll go back to Harry Brown. Well, we can muddle along for a lot longer. I think the muddling phase is about done. I really think, as a metaphor, when Yellen coughed herself off the limelight, this is something to pay attention to. Not that she coughed and had a problem, and my condolences to her. Really, I mean, she's a human being. The point being that they are choking. It's a metaphor for the whole system is choked off. They don't know what to do. They don't know the next step, and they almost look foolish trying to pretend that they do at this point. So that reality is going to start soaking into the general public, either at a subconscious or conscious or both level. And once it hits that trigger point, that tipping point, that aha moment for one person and then another and another, and all of a sudden it starts to spread, it's an exponential function, especially with the internet, because of the rapidity of communications and information that take place in today's world. You could see a market lock up or go limit up in the gold market as an example rather quickly.
David, one final topic. It's kind of more of a fun and interesting note, and I actually found it out from your website. Volkswagen, as many people know, has absolutely tanked the last couple weeks on allegations and confession from Volkswagen that they've been lying about their diesel emissions testing. And what's happened in the wake of that is a divergence between two of the precious metals, platinum and palladium. Platinum's gone down, palladium up. It's a little facetious me asking you this because I know the answer, but can you make any sense out of that?
Yes, definitely. I mean, palladium is used in catalytic converters for gasoline engines, and platinum is used in diesel engines. So it makes sense that both those are considered to be industrial metals, and they are primarily. That with a sell-off in diesels, let's say, you're going to see less demand on the platinum side. And with that idea being that there'll be more gasoline engines produced, that you would see an increase in demand for palladium. So that's fundamentals. But I want to go on. I want to go back to the metaphor. Colin, you probably heard this one, but there used to be an adage out there that said, as GM goes, so goes America. As General Motors goes, so goes America. And I think that's pretty apt. And if you look at General Motors, certainly been propped up by government infusion of cash. But if you look around Detroit, it's certainly not what it was in the heyday. Certainly General Motors is wobbly at best. So I want to extend that metaphor to the largest auto manufacturer in the world, Volkswagen. And is it appropriate to say, as the VW goes, so goes the world? I don't know. I'm asking the question. But I think this is a point in time. There's never really an exact point in time where you can say, well, this is where the financial crash started. I mean, they've done that in 1929 with the stock market crash, and you can use that argument. But normally, it's difficult to pinpoint. But you see these big events that when you go back in history, you can look at it and say, geez, why didn't people see that? Why didn't they realize that when Volkswagen came up with this revelation that they're not telling the truth about what the emissions are on the diesel engine, why didn't people realize that that was the top of the stock market, that Germany, the stalwart of the European Union, was in dire straits and that it was only going to go down for years after that. Why didn't they see that? But, there's not many people that really have the time to study these markets. They depend on others, and a lot of people don't want to be responsible themselves. So they just take in the mainstream media, they listen to a soundbite, they go back about their daily lives, and until it really starts to affect them, they really don't know what to do. But I think it's services like yours that interviews, whomever you feel will bring some thought processes into people is a very valuable service. And thank you for being on. I hopefully have been beneficial to your listeners, to your viewers, and hopefully there's something in this exchange between you and I that will be of value to somebody. That's my wish.
Well, I'm getting the feeling that we will look back at the end of 2015 as one of those major turning points, and speaking with you has further reinforced my belief. The Morgan Report, everybody, is at silver-investor.com. Always a fresh take backed up by real research and knowledge. David, thank you so much for coming back on.
My pleasure. Thank you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?